The loan with the bank kept becoming more and more requests. And I really ran out of time. And I ended up borrowing from my policy. And that was the first time I ever used it. I thought, you mean you just wire it into my bank?
What's up, Nick? Welcome to the BetterWealth Show.
Hey, appreciate it. Thanks for having me on.
I appreciate you reaching out. Like I shared with you before we hit record, one of the things that we're trying to be more intentional about is getting more people that are utilizing life insurance as an and asset, whether it's in retirement, whether it's in real estate investing, business, whether it's a ordinary family, because I think it's one thing for me to talk, run my mouth, talk about concepts, show pretty pictures or bad pictures. It's another thing to hear it from someone who's not in the space on the good, the bad, the ugly. And so there's nothing off limits. Just in full disclosure, you reached out to us and said, hey, yeah, I would love to share some of my perspectives being in the real estate space. We just found out that we're semi-neighbors in Tennessee. So thank you, 0% income and mostly sunny. I will say this, I'm moving from Colorado. I think the biggest disconnect that a lot of people have is they think Colorado is a bunch of snow and cold, and it's super sunny there. And it's less sunny, and I've been less impressed with Tennessee weather these last couple months. Yeah. All that to say, that's all I'll say. Coming from Wisconsin, I'm still not complaining, but right. It definitely makes me appreciate the sunshine in Colorado.
Yeah, well, I will say this last couple years, it's been more rainy and overcast than it normally has been. Usually it's sunny and, we obviously have sun. The snow as well, but yeah, it's fun finding out we're neighbors.
I love that, man. All right, so let's jump in. Who you are. We'd love to give your quick backstory, and then I want to jump into how you learned about life insurance, how you're utilizing it, the epiphanies that you had, and I want to even talk about some of the negatives because I try to play devil's advocate and really make the listener or person watching to this get as many inputs as they need to make the best decision in their life. Yeah,
absolutely, man. Go ahead. Go ahead. And you leave with some questions and I'll kind of dive into kind of my background and where I'm coming from.
So. Yeah. So talk to me about your background and just who you are and just a little bit of context before we jump into life insurance.
Okay. So I've sold real estate straight out of college. I've been doing it about 18 years. Just something that's always been of interest in me. Historically, it kind of goes down into my family as well. So it's just something I've always dabbled in. And then my wife and I started picking up rental properties. That was sort of our goal with retirement. Instead of doing 401ks, we thought we could amass some real estate rentals. And then the recession hit. And so kind of tasted having multiple, we had like 22 properties and we tasted that moment of we could lose everything.
Yeah.
So sold a bunch after a couple of years after the recession and slowly have built back over the last 6 to 8 years. And, I sell real estate kind of my day to day for the last 18 years. Only in the last 2 to 3 years have I kind of gone down the lane, what again you'd call like the and asset, and we kind of jumped into it kind of heavy. Part of that is I'm sure we'll get into is just the frustration of banks getting loans with banks for investments and things like that.
So my big question for you is everyone has a different overarching thesis as it relates to life insurance. You've mentioned a couple times that it's like replacement of banks, frustration of banks, which is interesting to me. What category do you put life insurance in, and what was like the real attractive nature of like, hey, I'm gonna overfund, I'm gonna max fund life insurance? Like, what was the attractive nature of that?
Well, I think originally it was just in my being 1099, I'm putting my taxes to the government. I'm putting it in a bank account. It just sits there, and just starting to realize, man, I'm like losing money every month, and that's large. Then I'm paying the government quarterly. So what I started to look at it originally was just a nice big bank account to just move everything in, the compounding interest or just the compound effect of the money that's going in there. And so my first sort of dabble, getting my feet wet a couple years back, was putting as much of my quarterly taxes in with any, obviously the policy, things like that. And then at the end of the year, paying my quarterlies and then paying the fine. I started to kind of see, this is starting to make sense. And then as that pot grew in my policy, I started realizing, well, I could buy this rental property with cash. And that sort of snowballed me into, wow, like, I could pick up property after property. And then it kind of turned into that Burr effect. I know you work with a lot of investors. So I started doing the Burr effect. And then,
so why don't you explain that Burr is buy, rent,
buy, renovate. I'm going to draw, let's see, buy, renovate, rent,
refinance,
repeat. So,
yep.
I haven't done one in 2.5 years. And the reason is the same original frustration, which is the banks, right? So every time I tried to pull my money out, that bank would just drag me through the mud. And so that was just that repeat itch, it was like just a frustration that kept returning. And so then I just started putting more money in my policy, started to open up more policies. So again, selling real estate, we've got the benefit of like our cash influx can be pretty substantial at times. And so I just started putting everything in, started seeing that compound interest, the ability of that to grow, started to acquire more properties and less refinancing. And now I'm in a season of refinancing now because I've gotten into creative financing and owner financing with some other what I'm seeing, the elderly generation, like our grandparents, kind of have 30, 40 houses and they don't want to sell, but they don't want to manage it anymore. And so that's kind of led me down that road.
Yep. And we'll get into creative financing in a second, but so take a step back. You could just have a ton of money in savings accounts.
Yeah.
And you would get the same kind of effect short term, correct? Like you have control, but the epiphany that you had was the long-term compounding. Was there anything else about life insurance that was attractive, like death benefit, chronic illness rider, the different other benefits of life insurance, or was it just the compound interest long-term would been better than a savings account?
No, I think definitely having that life insurance for my family. I'm married, I've got kids, and so that's attractive. It's a little bit more of a secure thing for me. And I think studying the history, knowing that really, and you correct me at this if I'm wrong, but there's never been a loss ever, and since the creation of the policy, that gives me a little bit of emboldenment, especially in light of these 3 banks that have just recently gone under. Like these are just a continual reinforcement for me, But I definitely love the life insurance policy aspect. I mean, that's huge for me.
Yep, and just yes, you're 100% right. The companies that we use, mutual companies, whole life, pay a dividend. That one thing that I think even the critics would say is they're very stable. They've been around for over 100 years. They've been paying a dividend every single year, which that track record is hard to look at and hard to compete with other things when you even look at, the United States hasn't been around that long. So very interesting insight there. When you were pitched life insurance or brought to this was brought to your attention, was there anything negative? Like, was there anything that was like, okay, like did you understand the pros and cons, or were you like, this is a no-brainer? Like, talk to me about your headspace as it relates to this, because you said you went like all in,
right?
And there's all different type of people, but I'm just curious, was there anything that was like, holding you back, or is there anything that was a turnoff that you just had to deal with before jumping all in?
Yeah, that's a great question. Honestly, for me, I dove in, I read like 12 books in the first 2 months. Just, I stumbled upon your YouTube channel, dove into listened to all of yours. And then I got 12 books. I just started devouring the books. And then once I did that, and then it started to make sense in my brain, Yeah,
what were some of the books? And did you read, was And Asset one of the 12? You don't have to lie.
Yeah, no, it was. Yours was, I think, the 4th one. So I started with Becoming Your Own Banker, Nelson, of course. The book that started it for me was, and I think the title has changed since, but it's What Would the Rockefellers Do, I believe.
Good friend of ours, Garrett Gunderson. Now I think it's called What Would Billionaires Do? Thanks to the Rockefeller family giving them a call and saying, hey, we don't appreciate you running ads using the Rockefellers' name. So that was kind of a funny story. But but it was an amazing book, an amazing books. Yep.
100%. Yeah. And they were, the rest of them were like, I couldn't even tell you. I've got them in my Audible, and I've got a couple on my, none of these actually are those books, but these are books on debt, buying debt with the actual whole life policy. So,
Cool.
but anyway, yeah, so that was how I sort of discovered it. And then being married, my wife had a little bit of questions as well. So it was kind of a slow, like, let's try it out. And we pulled policies out on my wife, myself, and my kids, because I felt that knowing I could pull the money to pay my taxes, I could see if it worked. Like, to me, that was enough. And within about 6 to 8 months, I was all in. I was, and this is probably deeper than your question. You know, we're going to do some renovation on our house, and I put some of that money in there. You know, I want to put as much in there as I can, because I believe the power of compounded interest, you know.
Yeah, so in another way of saying that is you had a refinance or you had a HELOC and you used some of that money to fund the life insurance?
Yes. Yeah.
Okay.
And again, that's just trying to get that. I'm 44 and I'm a little behind in stacking that money in there. And so that was in my brain, like, oh man, how do I feed this thing as fast and as deep as I can? So
I have to, just for all the compliance people out there, insurance people, I did not recommend this. And by the way, if you're watching at home, I wouldn't necessarily recommend to go refinance a house to fund that. But you're right. In some case scenarios, especially if it's disclosed, it can be a phenomenal. And it really comes down to not just mathematics, but the whole life insurance conversation comes down to, are you better off having this in your life versus not? It's not just the rate of return. It's as an asset class, are you better off having your monies there versus other areas? And I think when people understand that it's not an investment,
right?
It's a place to store your money that gives it multiple uses. Oh, by the way, protects you and keeps your money safe and gives you optionality and control. That's all I'll leave it. I'll leave it there. But for all you compliance people, just wanted to set the record straight on this interview. And I appreciate you sharing openly. You can say whatever you want. You don't have to worry.
Okay,
and
cool.
I appreciate you sharing that. You went that far to say, hey, I'm gonna take some potentially dead money in my house and get it working.
Yeah, and where that came from, I mean, other than that accelerated growth, our growth was, you know, I'm 6 to 8 months before they start. Well, I've got a couple $100,000 just sitting in my bank, and I'm itching to move it. And so I thought, well, I'll just store it in here, and then at the time I'm probably using it, I can kind of fill it with a little bit more of income, if that makes sense. So I wouldn't recommend it to, you know, it's just something that I've done, and you know, it leads into.
And also note, it's not an arbitrage play either. Like in the short term, you're paying more interest,
right?
But that doesn't make it bad. It's just that's another thing that I think a lot of people misquote is like infinite banking is arbitraging your money. It's like, sure, if you're stacking all the benefits of life insurance, but it's not arbitraging it from the internal rate of return to the external control. Like that's not true.
Right. But
it truly is giving your dollars more than one job, and that can be beneficial, especially if you understand all the benefits to life insurance. And so let's talk about let's talk about you using your policy and the journey there, because I know that you've have multiple policies. When was the first time that you used it, and was that also like pretty crazy? You're like, I have a compounding asset, and I also borrowed against it to fund other assets. Like, was that one of those like epiphanies that you had to be like, wow, this actually would be pretty incredible, and why doesn't more people do this?
Yeah, I mean, honestly, it left me there, right? So the reason I used it, I understood the concept, and I was nervous to use it. I was sort of forced into using it. I tried to buy a duplex a couple years ago, and I needed a down payment. So I was like, well, I'll use this for the down payment. The loan with the bank kept becoming more and more requests, and I really ran out of time, and I ended up borrowing from my policy. And that was the first time I ever used it. I thought, you mean you just wire it into my bank? I mean, it was, what you just mentioned is, I thought, this is so simple. Like, how have I never learned this in my 40s, you know? That was how I kind of stumbled into actually using it in that direction. So, yeah.
Yep. Is there anything else you want to talk about on the life insurance side? Anything like I know a lot of times when we're dealing with spouses, one person gets it, one person's a little bit maybe doesn't get it. When it comes to your family, was there any epiphanies that your wife had that like got her more excited, or was she like, all right, I think you're a little crazy, but I'm gonna stay married to you, and we'll see how this goes?
Yeah, no, great question. I've been married over 15 years, so my wife's a little slower and safe in that regard. So she trusts me. So we started slow. She sees that it works now. I don't know that I'm sort of that I want to invest it and use it and keep it rolling. She's not necessarily wired that way. But, just today I refinanced one and it appraised for like another 120,000 over what I bought it for 4 months ago. So I actually have to open another policy with my wife because I'm paying back the loan, but then there's a little bit more that is going to cap me this year. So the quickest way is through my wife. So she's learning a little bit more, probably not really something she cares to learn about, but it's important, we believe, for her to understand everything as well as us, myself. Yep. So that's been helpful.
Yep. And what's really neat is and I would assume that a big life insurance policy is probably on you, and so you're doing your thing, and if something ever does happen to you, that asset is going to pay more than you've ever put in to her and the family. And so it's just one of those self-fulfilling plans. One of my mentors said it's like life insurance is one of the only products that will ensure like when you want, like whatever happens to you, like you'll be fine. And it's just one of those, like it's self-completing, and not all of us will live to the mortality of 86. Some of us will live past that, and some of us won't. And hopefully, life insurance is a great place regardless of your situation in that. Anything else you want to talk about life insurance? And I would love to shift to creative finance, but is there anything else that you'd like to share there?
Honestly, there's not much more I want to share. I would just encourage, if people have not jumped into it, definitely put your toes in the water. I think once you're in and you understand the basics, I think it just moves exponentially. And the idea of opening more policies, don't be scared to do that, versus getting one large policy out the gate. That's just a recommendation on my end. I have some clients / investors that have jumped. I mean, they believe in it so quick once they understood it. I mean, they started with $15 million life insurance policy. That's not how I started. I started like, give me $1.5 million. And, obviously over the years, I've grown that. So,
yep. It's funny. I could not agree more. I'm a big fan of dipping your toes. And I think there's a lot of wisdom with that in anything that you do. A lot of times it's like, okay, we could talk about compound interest, but wait a year. Compound interest is not going to kill you. And a lot of times a lot more clarity will happen. And so I'll actually talk people down from saying, hey, listen, like, it's okay, like do it and maybe just stagger it. And it's a lot of times it's like you give yourself even more flexibility, and everyone usually feels good about that. And so I couldn't agree more. Like obviously you want to, the way that we set up policies, again, creates a ton of flexibility from the get-go, but you really, really want to be sensitive of that minimum payment, that base contribution, because that really, that needs to become a no-brainer. And the moment that keeps you up at night, that becomes a problem. And so all that to say, I couldn't agree more with that.
Yeah, and I second, that's the reason I started. I'd never lost anything in the recession, but that fear of losing those rentals, I never want to feel that again. I never want to walk through that again. So I was like, well, let's start small. So if I never can increase, we're good, but yeah.
Yep. What's your thoughts on emergency funds? A lot of real estate people just don't save. They don't keep money aside because they just feel like it's burning a hole in their pocket. I love having money off the side. I feel like I'm a better business person. I'm a better investor. What's your thesis as it relates to how much money you won't tap into for the sole fact that it's an emergency fund?
Yeah, that's a great question. I'll share that with you. We try to keep 3 months of living, and then outside of the 3 months, and that's in half of that is in like an online bank, like we use Ally Bank, and then the other half is local, where I could just walk right in, get that money, and then we keep our day-to-day bank account local, of course, too. And for me, my wife needs, she's more cautious, and I want peace in the home, and it's a good balance for me. It slows me down. I'm a big proponent, but we usually keep 3 months, and then I've got what we call a war chest. My friend Brett Tanner taught me that, and just where the bulk of it really is in my whole life, but we keep about 3 months, just immediate. I could grab it. Yeah.
You have about 6 months of safe money that you're not going to, tap into, and so that really is kind of, you have a 6-month buffer.
Correct. Yeah. And then we've got, our rentals pay us monthly, so that's real nice. So if I have to move a month or so of that, it's okay. But overall, we've got 6 months there. Yeah.
Cool. I think that's good. And my challenge to anyone listening or watching is, what is that number for you? Mine looks more like a year. Doesn't make it better or worse. There's opportunity costs in whatever decision you make, but really figure that out. And your goal should be to get to that number as fast as possible, because then everything in above that, think of it like an investment fund. We are mini funds walking around, and you can invest your time, you can invest your money. And so you'll find when you start building that up, opportunities will seek you out. Something really bad happens if you're like, haven't built up that, whatever that nut needs to be. One of the worst things you could do is take all your money and put it into something, because it creates a lot more stress. And so obviously there's different stages of life. If you're 19 years old living at home, you can probably take more risk than my friend Nick here that has more responsibilities. And so everyone's situation is a little bit different, but I think there's a lot of wisdom as it relates to that.
Yeah, that's a great question. I'm glad you asked it, because it's something you have to think about daily, right? Even as a solo person, single person. So yeah.
Yep. Let's talk about creative financing. So there's a lot of people out there that talk about it. I think it's a big deal when it comes to real estate. Interest rates are going sky high, and a lot of people are like, oh, I can't do real estate because I can't do traditional lending or work with banks, or it just doesn't make sense. Creative financing opens up so many doors. I want to give Pace Morby a shout out. I think he's one of the best people talking about this in just period. I love how he shows up, love how authentic he is. And so huge shout out to him. But talk to me about your experience with that. And is there any nuggets that you can give to the BetterWealth community on how they can utilize creative financing to better their finances?
Yeah, I think it goes back to what you said. Once you focus on something, opportunity presents itself. And that's kind of what happened to me. I started using my policy to buy properties, and I've got a team, and a real estate team. And my challenge to our agents is to own your home and then own an investment property. And so what I started to see with our agents as rates have gone up is, man, I can help you with the down payment, or I could help you with your closing costs, things of that nature. And started to realize, well, my buyers and sellers, they have the same struggle. Just the other day, last month, actually, February, I had a seller who needed $5,000 for a moving truck, put a deposit down on a rental because he moved out of state. So I'm able to help him in creative ways that I had never thought of in the past.
Yeah.
And part of that's just the velocity of my money moving, continually moving. And as I began to focus on those opportunities, more opportunities started opening up. There's obviously an extreme. You could give money to a builder who wants to build one house, and you can partner with them in that way. All the way down to, okay, I'll help you with your moving cost. And some of my agent friends just across the country help with remodeling people's houses, giving them a little bit of a money can move as far as the interest you charge. So
awesome. Any other money hacks or epiphanies that you've learned in your 44 years of living that would help us?
Wow, that's a great. I think the biggest thing right now is I've really delved into the creative financing with owner financing. A lot of our what I would say is kind of our grandparents / maybe all the way down into the 65, 70s. They kind of want to get out, but they've done this 1031 forever. They don't know what to do with the properties. They're exhausted, but they need that passive income. And so you can get creative by giving a lump sum down to these people and then pay them monthly. And you continue to work the rents to where it works in your favor of a good way. Repair the homes, bring it back to a good standard.
So, and I'm just verbally processing here. So like you have someone who's collected a lot of homes, they have a portfolio, and they're probably getting cash flow because probably a lot of the homes are paid off kind of deal, but they're not in the business of wanting to be landlord anymore. And so a way to do it is you're saying seller finance. So instead of having to go to the bank, deal with the bank, on today's interest rates, we go to the seller, i.e. the people that want to offload this. And instead of giving them all the money, we take the deed of the home, we pay them something so they get some money. But if we gave them all the money, they have a big tax problem. It's like,
right.
So now we're paying them. And so they're getting a stream of income. And if we ever stop paying those payments, I'm assuming they would get their house back, maybe. And so it'd be one of those, like, they're protected, but it also allows us to get into real estate without having to go to the banks with today's interest rates to apply for 40 plus homes, which would be impossible.
Yeah.
And so we win, they win, and it seems like creative finance done well is a win for everybody. Did I say that right, or is there a piece that I missed?
That's absolutely right. What you have is you're going to put a lump sum down. You work that out with your with the seller of the properties, right? So each of it could change, and depending on their circumstance, defines how much you put down. And then sometimes they want a larger chunk each month, so you put less down, right? And so that's just obviously the term creative financing, and having I believe we're living in the time right now where it's going to be the tremendous opportunity for us. And so
I agree.
Yeah, if you don't have money, you don't have to have money. You can borrow it from someone like myself for creative, and sort of like a hard money, if you will, but you can become very creative. You can give somebody a little bit of long-term passive income, but not ownership, for giving you the down payment. It's endless, and the nuggets, we could talk for hours on it, just scenario-wise,
Yep. I love it. And I would, encourage people, if you have more questions, I'm sure, Nick, you'll make yourself somewhat available to people reaching out. And I would just encourage you to learn more about that, because if you're someone who's not getting to where you want to go and you're using money as an excuse, you can take the creative financing pre-frame and apply it to anything. You can apply it to businesses, you can apply it to real estate, and you can apply it to even outside of like gaining skills. I think the most no-brainer creative financing way of thinking is like, if you're young and want to gain skill sets, working for free strategically could be a way to gain those skill sets creatively. Instead of going to school and paying X, Y, or Z, you could potentially learn from someone that's better to teach you, potentially even get paid for it. And a lot of people like are so anti, like, oh, your time is worth more. It's like, if you're basing your time like hourly asset, I would rather make $7 an hour doing something and learning than making $100 an hour doing something that has no upside. So all that to say, man, I appreciate you sharing that. I think the creative financing can be applied to almost any area of our life.
Yeah. There's so much opportunity. I think, one of the things COVID brought us was that gap year, right? Just seeing a massive amount of people skipping a year of college. And now I believe I read an article yesterday about less people signed up for college. I don't know if it's the Southeast or where, but less people are kind of going back. They're doing trades, and again, back to what you're saying, link up with somebody, even what you teach every day and what you can learn from just what you're teaching.
Right.
People could set their whole lifestyle, their family tree in a whole different trajectory. And it's just incredible the day and age we live in right now,
I agree, dude. I agree. Anything else you want to say before I ask you my last question?
No, it's good. Just appreciate you having me on, man. And I appreciate all the content you're pushing out. So you teach me every time I'm learning, watching your videos. So it's awesome.
I appreciate that. I appreciate you reaching out. And I just want to share, like, if anyone wants to be on the show, talk about your experiences, we're going to do more of this because I love interviewing like important people, quote unquote, authors, people that are thought leaders. But I've actually learned more in a lot of cases, having conversations, having dinners, interacting with people that are ordinary just like me. And a lot of the ideas that we come up with are brilliant. And so I want to balance this by having different perspectives, because I think we can learn no matter who we're listening to, and that just will make us more rounded. So thank you for being brave, reaching out, and very, very much appreciated it. My last question for you is a question that I think will serve you and also will serve everyone here. And the question goes like this: if this is your last day on earth and you're with the people that you love the most, and you can't give them anything, no money, no book, nothing in writing, no videos, but you just have one last conversation, what are you going to make sure to highlight in that conversation and say to the people that you love the most?
That's a great question. I think since COVID, a lot of what I've thought about is just my family, my primary, my wife and my kids. And I believe I come from a pretty rich heritage. And, I'm originally from New Orleans, and we took the kids down to New Orleans. So just pouring into them about the heritage of who their grandparents are, who their great grandparents are, and just the honor and the dignity that was passed down in our family is extreme importance to me, and we want to instill that in our children. And that's a major focus today, and I think going on in the years. So if I had one more day with them, it would just be to sit with them, probably on a sunny day, overlooking the mountains and a lake, and just pour into them about who they are, their destiny, and then also where they come from and the heritage that they carry. So,
man, I appreciate that answer. I think that gives a lot of context to who you are. We'll put the best way that you prefer to get contacted in the description below. We'll also do that in the podcast. Is there any final words that you have before we end today?
No, man, I would encourage anyone listening, just delve deep into what you're passionate about. I think your destiny's found both with your people who you feel most connected with, and also when you discover what your passion, when it's aligned with your destiny, man. I would just push hard into that. And I think one of the ways that you do what you're doing, how you speak what you're passionate about, it comes out through your material and through all your teaching, man. You're a great model for anybody. Yeah.
Thank you. This is a framework that I use for this, is the person that can give. Like, look at where you can leverage the ability to give to others. That a lot of times will be where our passion is. So the value of your life, and I got this from Andy Stanley, the value of your life is always measured by how much of it was given away. I very much believe the person that can give the most, whether that's money, whether that's time, whether that's just inspiration, is truly going to be living at a higher frequency. Not that anyone is more important than others, but I believe if you can figure out a way to live where you can be giving to others, that is going to be a lot of where your passion lies. Maybe not always, but if you're like someone that's like, oh, everyone's like telling me to find my passion. I watch TED Talks, find your passion. Reverse that and say, what do I love doing, and what can I bless other people with? And if you can find that, and you can find ways to do that more and more and more, life gets really fun. And if you're not doing that, if you're taking what Jeff Bezos talks about in his last letter to the shareholders and Amazon, saying like, you should consume less than you create. And I think that's another metaphor of like, if you are consuming more than you're creating, you're probably not loving life. But if you can create more value, give more than what you're consuming, that's a really good metric in life to be at. So, man, I appreciate that and appreciate this conversation. And I would love to hear your thoughts in the comments below. What was a big takeaway? What questions do you have? I'm going to do a better job answering your questions. If you want to learn more about life insurance, the And Asset, whatever we want to call it, we have an And Asset Vault down below, and you can go check that out. And we're trying to give you as much free content as possible to help you make the decision, is this something that I want in my life or not? So Nick, thank you, and we'll see you next episode.